But with that, let's move on to the final update on our global market wrap this morning. European markets ended Wednesday's trading session higher. So the French CAC index was up around 25 points. The German DAX index, also on your screen, saw a gain of around 140 points. And the British FTSE closed with gains of over 40 points. Now, it was really the strong earnings which came through from the likes of Standard Chartered, Barclays, as well as Deutsche Bank, which really drove the market higher. And investors should focus and will be looking at today's European Central Bank meeting. That is important to watch, where the ECB is widely expected to raise rates by 75 basis points. That is the consensus estimate. Markets will also be tracking the ECB's commentary on the path towards quantitative tightening as the EU heads for a likely recession. So that's what we're tracking in terms of the European market action, and we will keep bringing you updates on that through the day as well. But that's really everything that's going on globally. Let's talk about how all of these cues impact our own markets and the entire list of cues and stocks that you should keep on your radar today. We have Nigel, Sonal, as well as Vahishta joining us now to take us through the trade setup. Guys, a very good morning to all of you. And Sonal, let me come across to you first. We were just going through everything that's going on globally. Take us through what we should watch for our own markets.
Well, a lot actually. Good morning, Pavitra. Well, mixed global cues, so to say. US markets largely low. It was Dow, but it was absolutely flat with some positive bias. We got weak numbers coming in from Meta, Microsoft, and Apple. So tech-heavy index, that definitely is in focus. More tech earnings are expected this week as well. US dollar index has slumped to 109.5. That is below the 110 mark. US 10-year yield has softened to near 4% versus 4.2 levels that we saw last week. And the Q3 GDP data for the US markets is expected today. The other thing is jobless claims, the initial jobless claims, they are expected today as well. So big numbers in terms of the market moves is what we'll be watching out for. In terms of what is happening in Asia, largely positive cues. We have Hang Seng, which is sitting with gains of around 2%. Taiwanese index up around 1.4%. So it is looking good as far as Asian markets are concerned. However, there was some GDP data that came in for South Korea, where the third quarter GDP is the slowest in 2021 at 0.3%. Oil prices overnight, they were higher by 3% above the $96 per barrel mark, led by record US exports. So a couple of things that we need to keep an eye out for as well. As far as our own markets are concerned, on Tuesday we snapped the 7-day winning streak, but today it is the monthly F&O expiry, so there could be some volatility in trade today. Nifty is up 900 points in this series so far, so let's see how it closes this particular one. So the support for Nifty now stands at 17,560. The resistance on the upside is at 17,800. But if we look at the SGX Nifty and compare it with Nifty futures, because yesterday we were not trading, it is indicating an uptick of more than 250 points. So it looks like it could be a day in the green for us. But from there, we'll see which way things go, because it could be volatile because of monthly expiry.
All right, so let's brace ourselves for a volatile session after we do get that positive start. Sonal, thanks a lot for that. But let's now move on to Vahishta, who has the entire list of stocks that we should watch out for in today's trading session. Hi, Vahishta.
Hi, Pavitra. Good morning. The first stock is, of course, Dabur. The revenues were up 6% year-on-year. However, the gross margins as well as EBITDA margins have been lower on a year-on-year basis. However, the new development for the company is that the company has entered into the branded spices category. This is by acquiring a 51% stake in Badshah Masala for approximately 590 crores. Moving on to Gland Pharma. Again, the results were announced. The revenues were better than estimates, but the margins and profits have been a miss. However, the company is still reported a quarter-on-quarter recovery, which is positive for the stock. There was a 3% growth in the core markets, which includes a 5% growth in the US market. The Indian business, though, has not performed well, with a degrowth of 42% year-on-year. Crompton Greaves Consumer Electricals has reported the Q2 numbers. The numbers have been lower than the CNBC-TV18 poll. The revenues came in at 1,700 crores, while the margins have declined to 11.4% versus 15.5% on a year-on-year basis. Though there's a new development which is coming up in Zee. Sony and Zee have voluntarily agreed to sell 3 Hindi channels, which includes Big Magic, Zee Action and Zee Classic. And this is to address the anti-competition concerns which were arising out of their merger deal. Now, at present, these channels make just about a minuscule contribution to Zee's revenues. So, on the face of it, looks like Zee and Sony have got the CCI merger nod without having to lose much. Something on the pharma stocks, Lupin has 17 observations which were issued to Lupin's biotech plant, and for Glenmark, the Buddy facility was under the import alert.
Right, Vahishta, thanks a lot for taking us through that entire list of stocks. We're going to keep all of these on our radar. Finally, it's over to Nigel, who's looking at all of the cues from the F&O space. Nigel, expiry day.
Well, that's right. It's expiry day. And, one thing that's been standing out has been the institutional buy number. The FI and DI number, you look at it together. And last 7 trading sessions out, it's been close to around 800 or 900 crores, which is positive. Next up, we look at the FI data and the F&O market. Well, they unwound some longs as well as shorts. And now the short positioning is at around 66%. So they continue to remain net short, though the short positioning has come down from around 85% to around 66%. A bit of a worry is now they're writing calls. So the puts that were written, they were unbound. Well, they wrote close to 25,000 call contracts. And on the buying side, well, they bought some calls in, in the session before we got into trade. Couple of strikes that were active. 17,800 calls, 17,700 call. Between them, close to around 40 lakh shares were added. And if you look at the highs of the day, it appears the 17,800 odd mark is a bit of a barrier because we've gone there the last couple of sessions and we've seen some selling out there. So the SGX Nifty is indicating that we're going to be starting off bang in line with where the resistance zone is, at around that 17,800 to around 17,850 odd. So maybe some profit taking is what we could be met with. But the uptrend continues till the 50 DMA is held out. The Nifty Bank took a bit of a break, in Tuesday's trading session. So we'll have to keep an eye out whether or not it can get back to those record highs, which would be good news for the Nifty. That's going to play a vital role. SGX Nifty suggesting a start closer to around that 17,850 if you adjust it. Back to you.
All right, Nigel, thanks a lot for getting us all of those few cues that we should watch out for from the F&O space. Let's actually thank our entire research team, Nigel, Vahishta, Sonal. Thanks for taking us through the trade setup this morning. But with that, it is time for a short break on the show. When we come back, we'll bring you exclusive conversations with Tata Steel MD and CEO TV Narendran. He says